A lot of the time you think, oh, I want a bit of this and a bit of that and a bit of this because that's going up and that's going up and that's breaking out. You actually underperform by doing that. I found that being more concentrated in my bets, using the don't fuck this up thesis, which is have, let's say, 80 or 90% in the main tokens. And those would be Solana, Bitcoin, Ethereum. Then you can have weightings in whatever you choose it to be, where you think you're going to find outperformance, including some memes, which should be a much smaller part of your portfolio because you're likely to get wrecked. You'll have fun doing so, but you're likely to get wrecked. Okay, next chart, XRP itself, fabulous pattern. Look at wedge after wedge after wedge after wedge. So we're just building another wedge now, ready for the next break higher. So that move is clearly not done. If you look at the weekly chart of XRP, it's a stunner. This massive 7-year wedge is broken. Who knows where this chart goes to? It's very powerful. But then go back to that chart of SUI versus XRP, and it's suggesting that SUI should even outperform this. So that's the perspective I have. Now, it's not always going to be 100% right, but that's how I look at it. Here's SUI Solana. So we've been consolidating the wedge. We had the huge outperformance, consolidation, breakout, retest the breakout zone. Next leg should be SUI's favor because of the long-term chart. And this is the weekly chart. And you saw the daily chart earlier with the inverse head and shoulders, stuff like that. So there's a lot of great charts that are lining up that say banana zone. In meme land, whiff, dog whiff hat, inverse head and shoulders, broke out, retest, next leg higher should come shortly. Jupiter. So Jupiter is kind of a leverage bet on Sol because it's a DEX on Sol. So more Sol activity, more Jupiter goes up. So it's broken out as well and looks very positive. These kind of wedge patterns that we see are immensely powerful. So this is beta to Sol. Another one that did a very similar pattern was MOG. It had exactly the same wedge and then it exploded higher, and it's been exploding higher since as it ended up getting listed on the major exchanges. So again, you can see these patterns. They're human behavior on a chart, and they don't all happen at the same time. This is the hard thing about the banana zone is different things pop at different times, and you've always, trust me, always got the feeling you've got the wrong token. Then yours pumps, and then something else pumps. And you're like, do I chase this one? Have I got it wrong? Stick with your program. You'll probably get it right over time if you use the don't fuck this up thesis of asset allocation. So don't worry. FOMO is a natural part of this market. The real temptation is to chase every breakout. Don't do that because they roll over time. They repeat the same patterns, but they're not all 100% in the same phase. The other one that's an absolute stunner of a chart is Doge. Doge just keeps doing the same thing every cycle. It does consolidation, 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 explosion. Consolidation, 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 explosion. The explosion is always the banana zone, and Doge is the strongest characteristic of the banana zone. It's this massive meme that gets the world's attention. It has been going since 2013. And it has been unstoppable. And look at the breakout levels. Now, if we repeat anything like we did the last two banana zone periods, we've got a hell of a ride to come. So Doge is something that I keep a close focus on.
Raoul Pal recently came out with a shocking prediction regarding the XRP coin and its massive future increase. XRP has been at the center of a compelling financial narrative. Once soaring with a market cap of $175 billion, the digital asset has seen a steep decline to $149 billion. However, just as traders begin to tighten their grip on expectations, a unique metric promises to shake up predictions. Welcome back to Investocracy Crypto.
Leverage play on SUI, which is deep book, which is the liquidity layer for SUI. So the more, if you think of like the Jupiter idea, the more activity that happens on SUI, the more deep book is likely to go up. And it's like $180 million right now as an entire value. Now, if we're right about SUI, that that it gets into well into the top 10 and potentially the top 5 in this cycle, well, the liquidity layer is going to be extremely valuable. So, there could potentially, and it's not a recommendation, but it could do a 10x. So this is how I'm saying there are ways of having leverage plays on top. Okay, let's go back to the liquidity story. So the liquidity story here is, oh my God, and I've been sent this chart 1,000 times by people. Oh my God, what happens? Is it all over? Is this the peak? Is this the end? Do we get out now? What happens? What happens? Panic, 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 bullshit. Okay, we had exactly the same thing last time Trump was elected. The dollar was strong, rates went up, liquidity contracted, the market had a big rally, which is Bitcoin. And then in January, because of the lag, what we found was a sharp 27% correction in Bitcoin. And then it ripped higher. Ripped higher so much, in fact, that it went up 23x. Now, I'm not expecting that because this was a much earlier cycle. But what we're saying is that correction is not to fear. That correction is just a marker point from phase 1 of the banana zone to phase 2 of the banana zone. Phase 2 of the banana zone usually goes into US tax season, which is like April. Then there's usually a consolidation because people have to sell tokens to pay taxes. And then there's usually phase 3 of the banana zone is the rip into year end. And that's all driven by the liquidity cycle.
Market observers have often been puzzled over the interactions between digital currencies and traditional indices, yet few welcome the convolution with the same enthusiasm as eGrag. By juxtaposing XRP's market movements against the XAU index, a metric that tracks precious metal mining stocks, eGrag opens a new window into potential future price action for XRP. Amidst XRP's price struggles, the pair's recent behavior against XAU has seen a narrative uplift.
Done that, we've corrected the breakout. Now, global M2 is actually driven by the strength of the dollar. Now, the dollar has started to weaken. We expect it to weaken going forwards, and that will then reignite the next phase of the banana zone as we start bouncing higher. You can see those corrections in M2 were short. Now, the reason being is we've got to roll all of this global liquidity. We've got massive amounts of debt to roll over, and you need liquidity to do it. So that is the game, the big game, the everything code game that I've talked to you about. So the everything code game is very much at play. This is a phase, the early phase of the breakout. This year is the year of liquidity, and that's why the year ahead, and that's why the banana zone plays out so beautifully. So we talked about global M2 being driven by the dollar. So let's look at the dollar. And also rates is the other part of financial conditions and liquidity. So what we're finding is that the dollar, as you can see, and rates had moved away from trend. That was the strength that we saw. This is what creates the down move in global liquidity. Now, what's interesting is the Citi Economic Surprises Index, which is an index of whether the economy is beating forecasts or underperforming forecasts, says we should now have a period of underperforming forecasts because it was driven by the tightening of conditions from the dollar and rates. Now, obviously, we know if the economy starts underperforming forecasts, like we just saw the unemployment rate rise to 4.2%. Once we start to see things like that happening, what happens is people start thinking about we need to cut rates more.
Earlier this month, a sudden crash to 1.7 seemed like another grim chapter. However, and in a plot twist, XRP bounced back above its equilibrium phase and even strode confidently past its 7-month moving average. This pattern, historically tied to a 1,000% increase in value, echoes through time, potentially setting the stage for an impressive leap. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Is rate cuts priced in? Very few rate cuts priced in. So there's like, I don't know what the scale is here, but there's very little rate cuts priced in, but it's driven on a forward basis by the dollar and the long end. So it's now saying as we weaken economic growth, we should start to see rate cuts. And then, as you can see, we're starting to see the pickup again in financial conditions, which is important. And I'll come into that in a minute. So when you put it all together, they're all the same thing. Fed rate cuts, the DXY, 10-year bond yields, they're all highly mirroring each other. 10-year bond yields seem to be suggesting faster and faster that the dollar should roll over and rates should roll over too. That creates financial conditions. And now what we've got here is financial conditions index, which is rates, the dollar, and oil prices, has been consolidating for a period of time. And it is suggesting that the ISM, which is the business cycle, the Institute of Supply Managers survey, should be much higher, i.e., we've got economic growth to come. It leads by 9 months. So in 9 months' time, the economy will be a lot stronger than it is today. And this is going to be important for you. So all of the stuff we talked about, rates, the dollar, even oil prices, all drive financial conditions, which drives cryptocurrencies, which drives markets in general, which drives the business cycle. When we look at the forward-looking basis on the business cycle, we can see things like the Philly Fed. Well, their new orders index is exploding higher. Now, whether this is just on the Trump victory or whether it's on orders they see in advance, not sure yet. Philly Fed expectations index exploding higher. Empire Manufacturing, that's for New York, exploding higher, all suggesting the ISM is going to be super strong going forwards.
For investors sitting on the fence, the insights churned from this fusion of digital currencies and precious metals beckon with undeniable allure. A similar 1,000% rise, mirrored from past movements, could indeed elevate XRP to the giddy peaks of $28.5 per token. But what do you think? Share your thoughts. And finally, if you would like to know more about cryptocurrencies or specifically Bitcoin, go ahead and click on the next video on your screen. See you there.